Robert Shiller, the renowned economist who predicted the 2008 housing crash, is sounding the alarm again, warning that home prices are very high by historical standards. But what does this mean for your future investments? With new inventory data from Realtor.com showing a surge in homes for sale and price growth slowing, even declining in some areas, this shift could impact both investors and home buyers in unexpected ways. Stay tuned as we break down Shiller's warning and explore the opportunities emerging in today's housing market. The inventory explosion, a deep dive into the numbers. Now, let's talk about cold, hard numbers. America has 5.6 million vacant homes. Some say that's not just a lot, it's the highest inventory we've seen in nearly 5 years. But this surge isn't happening everywhere. Some regions are drowning in houses, while others are facing a drought. Let's start with the South. This region is experiencing a staggering 59% year-over-year increase in inventory. That's right, a 59% surge in available homes. States like Florida, Georgia, and North Carolina are leading this charge, with inventory increases of 49% and 48% respectively. But here's where it gets interesting. While the South is practically bursting at the seams with available homes, the Northeast is telling a completely different story. They're facing a serious shortage, with inventory levels down by a whopping 51%. Talk about a tale of two markets. Now you might be thinking, okay, but what about the rest of the country? Well, that's where things get even more complicated. The Midwest and West are somewhere in between, each facing their own unique challenges and opportunities. Let's take a closer look at some specific states. Florida, Tennessee, and Texas are dealing with the highest inventory surplus. What does this mean? It's simple. These areas are prime candidates for continued price declines. If you're a buyer, this could be your chance to snag a deal. But if you're a seller, you might want to brace yourself for some tough competition. Now, before you start packing your bags for a cross-country move, remember this: the months of supply on the market is even higher due to reduced sales volume. In other words, while inventory is rising, buyer demand isn't keeping pace. This mismatch could lead to an oversupply situation, which could spell trouble for home prices in these areas. But here's the million-dollar question: what does all this mean for you and your investment strategy? Well, that depends on where you're looking to buy or sell. If you're in the South, you're looking at a buyer's market with plenty of options. But if you're in the Northeast, you might find yourself in a fierce bidding war for the few homes available. Understanding these regional variances is crucial. It's not just about knowing the national trends, it's about diving deep into your local market. Are you in an area with surging inventory, or are you facing a shortage? The answer to this question could make or break your real estate investment strategy. Price cuts and market shifts, real-world examples. Let's look at some real-world examples that are shaking up the market. In Texas, a luxurious mansion, originally listed for $899,000 in June, has now been slashed to $775,000. That is a whopping $125,000 price cut in just a few months. This isn't an isolated incident either. It's happening across the board, from high-end properties to more modest homes. Take Lakeland, Florida, for instance. A 3-bedroom, 2-bath home that sold for $254,000 in March 2023 is now on the market for $230,000. That's almost a 10% loss in less than a year. Can you imagine buying your dream home only to see its value plummet in mere months? These price cuts aren't just affecting a few unlucky homeowners, they're happening in both luxury and affordable housing markets. Many sellers are now facing the harsh reality of losing money on properties they bought just 2 to 3 years ago. It's a stark reminder of how quickly the housing market can shift. But why is this happening? The answer lies in the inventory surge we discussed earlier. With more homes flooding the market, sellers are forced to compete for buyers' attention. And in many cases, that means slashing prices. This trend is particularly evident in areas with the highest inventory surpluses. Remember those states we mentioned earlier, Florida, Tennessee, and Texas? They're not just leading in inventory, they're also seeing some of the most significant price cuts. Now you might be thinking, great, houses are getting cheaper. Isn't that good news for buyers? Well, yes and no. While it's true that buyers can find more affordable options now, it's also a sign of a potentially unstable market. When prices start falling, it can create a snowball effect, leading to further declines. Let's look at the bigger picture. Home price growth is slowing across the country. In some areas, we're even seeing outright declines in home values. This is particularly true in regions with the highest inventory surpluses. It's a classic case of supply and demand. When supply goes up and demand stays the same or decreases, prices have to come down. But here's where it gets really interesting. These price cuts aren't just affecting one segment of the market. We're seeing them in both high-end properties and more affordable homes. This broad impact suggests that we're dealing with a fundamental shift in the housing market, not just a temporary blip. So what does this all mean for you? Well, that depends on your situation. If you're a buyer, this could be your chance to snag a deal. Properties that were once out of reach might now be within your budget. But don't get too excited just yet. Remember, a declining market can be unpredictable. That great deal today could be an even better deal tomorrow. Or it could be the start of a long-term decline. For sellers, the message is clear. The days of easy sales and bidding wars might be over, at least for now. If you're planning to sell, you might need to adjust your expectations. The price you could have gotten a year ago might not be realistic in today's market. Please take 2 seconds to help me out and hit the like and subscribe if you find the video interesting so far. Each like and subscribe helps support this channel and keeps us motivated to keep making you great content. Thank you. Now, back to what I was saying. Warning signs: weak demand and risky speculation. You might assume that falling mortgage rates would spark a buying frenzy, right? Wrong. Despite cheaper loans, buyers are staying away in droves. The mortgage application index is only up a measly 9% from last year, still way below what we saw before the pandemic. This lack of interest from buyers is a red flag we can't ignore. Here's where things get really concerning. Remember the house flipping craze before 2008? Well, it's back with a vengeance. We're seeing about 68,000 homes being flipped in a single quarter. That's dangerously close to the highs we saw right before the last market crash. And get this, the ratio of flipped homes to total sales has hit about 9%, matching those pre-2008 highs. It's like deja vu, but not in a good way. Now, you might be wondering, what's causing all this speculation? It's a perfect storm of low inventory and high prices, especially in southern markets. Investors are jumping in thinking they can make a quick buck, but here's the thing, when speculation runs this high, it's often a sign that the market is overheated and due for a correction. Let's talk about affordability for a second. The price-to-income ratios we're seeing now are way above historical norms, and history shows us that when these ratios get too high, they tend to come crashing down fast and hard. It's like a rubber band stretched too far. Eventually, it's going to snap back. But don't just take our word for it. The University of Michigan's Consumer Sentiment Survey is showing that pessimism about home buying is at an all-time high. People are looking at these prices and saying, no way, not worth it. And when a large number of buyers start feeling this way, it can create serious challenges for the entire market. So what does all this mean for you? Well, it depends on where you are and what you're planning to do. If you're thinking about buying, you might want to wait and see how this plays out. If you're selling, you might need to adjust your expectations, and fast. Navigating the storm, strategies for buyers and investors. Let's talk about market segmentation. It's not just a fancy term, it's a key to understanding why some areas are booming while others are busting. Take the South, for example. They're dealing with a massive inventory surplus. Meanwhile, the Northeast is facing a serious shortage of homes for sale. It's like two different worlds in one country. Now, you might be thinking, okay, but how does this affect me? Well, it all comes down to your local market, and I mean really local. We're talking neighborhood level here. Because in today's market, what's happening on your street could be completely different from what's going on just a few blocks over. Let's break it down with some real numbers. In states like Florida, Tennessee, and Texas, we're seeing a significant inventory surplus. Florida, for instance, is dealing with a 38% surplus compared to long-term norms. That's a lot of extra houses on the market, folks. And you know what that means? Continued price declines in these areas. And here's where it gets interesting. While some areas are drowning in inventory, others are still facing shortages. This is why understanding your local market is crucial. The days of making blanket statements about the national housing market are over. It's all about the micro markets now. So, how can you use this information to your advantage? Well, if you're a buyer, make offers well below asking price. Sellers in these southern areas might be more willing to negotiate, especially if they're sitting on a property that's been on the market for a while. On the flip side, if you're looking at an area with low inventory, you might want to move fast and make a more aggressive offer. These areas could still see appreciation, even in a challenging market. It's all about being in the right place at the right time. But remember, this isn't about timing the market perfectly. It's about making informed decisions based on data. Now, I know what you're thinking. This all sounds great, but how do I actually use this information? Well, here's a simple strategy. Focus on neighborhoods with potential for appreciation, but don't be afraid to make lower offers in areas with declining values. Remember, in a buyer's market, you have the power to negotiate. And here's a pro tip. Don't just look at the current inventory levels. Pay attention to the months of supply on the market. This takes into account the reduced sales volume we're seeing in many areas. A high months of supply could indicate an even bigger opportunity for price negotiation. The key takeaway here is that the housing market is no longer a one-size-fits-all game. It's segmented, it's local, and it's constantly changing. But with the right tools and information, you can navigate these choppy waters and come out on top. The road ahead, preparing for market turbulence. It's a perfect storm that could lead to a housing depression. But here's the thing, this doesn't mean you can't make smart investments. It's all about being informed and adaptable. Study and understand your local market. Look at inventory levels, price trends, and months of supply. These are your keys to navigating this turbulent market. And don't forget, even in challenging times, opportunities arise. For those who are prepared and knowledgeable, this market shift could be a chance to make strategic moves. Thanks for watching, and please make sure you subscribe if you enjoyed the video and watch this one as well.